United Capital PLC has released its unaudited financial results for the half year ended 30th June 2020. Copy of the results was released on the Nigerian Stock Exchange website, showing the company posted year-on-year 37% increase in revenue to 4.4 billion naira. Double-digit increases were also achieved in operating income, operating expenses, profit before tax, and profit after tax. Now, how did the company do it? What are their plans and strategies for the rest of the year? How do they navigate the financial terrain? Joining me to discuss this is Peter Ashade, the Group CEO of United Capital PLC. Good morning to you, sir. Thank you so much for joining me on the Global Business Report on the Rise News. The last 6 months, they've been very challenging across the world. We just talked about UBS over in Europe, 11% drop and high impairments over in Europe. But United Capital here in Nigeria has been able to weather the storm. How would you describe the operating environment in H1 2020 and how it's impacted your business?
Thank you and good morning. Well, the last 6 months, as we are all aware, has been significantly affected by COVID-19 pandemic. It is an unexpected pandemic that changed the face of business across the world. Nigeria is not an exception to that. Within the period, there has been significant adjustment to lifestyle, to the way we live, and we did not see any changes so soon. However, a lot of uncertainty that, characterize the pandemic and as it affects all the business scene. And if you look at it from the local economy, it affected the stock market. You've seen the downturn in the stock market. Then the valuation of Naira is affected. Again, when you look at the inflation rate in the country, it's been quite astronomical. From the beginning of the year, now we're talking about 12.56%. It's quite high. So these are the reflection of what you see. It affected virtually all the sector of the economy. But from a business perspective, United Capital, we observe, in the first half, at the beginning of the pandemic, it affected us a little, but we quickly adjusted because before now we already have a strategic outlook on how we ought going to run this year. So at the end of the day, we got around it and were able to turn it positively to the benefit of the organization.
Fantastic. Great stuff. All right. So we're just looking at your numbers, again, unaudited, looking at those numbers right now. Half year revenues up 37% year on year. Profit after tax, that up 16%, 1.9 billion. Your press release attributed the increases, for at least for revenue, to a 347% increase in net interest margin, 85% increase in trading income, 77% increase in fee and commission income. Can you share some insight into the drivers of the performance?
Thank you so much. The drivers of the performance are simple. As you're aware that United Capital happens to be a diverse financial services provider. So we have different businesses that make up. From an asset management point of view, we've seen a significant growth within the period. We ended the year at 39 billion in 2019 December. By half year, we've moved to 89 billion in terms of growth. We saw this growth mostly from our managed funds. So we took advantage of the downturn in the market, the low yield environment, to really position ourselves. At a point in time for the H1, we got to a point whereby the investors are particular about the safety of their funds. So we position ourselves giving a little higher margin compared to what the market offers. It might interest you to even know that we have the fastest performing instrument as far as the market is concerned across the mutual fund bandwidth. So this, really help our asset management business. And if you go to the investment banking business, within the period, you recall we came out with a CP, which was oversubscribed. It's 5.3 billion. And within the space of 1 month, we came up with a bond of 10 billion, which was 24% oversubscribed equally. These funds were carefully and well utilized. At the end of the day, when you see in terms of the outlook that you give in the utilization of this fund, that critically helped along the bandwidth. And when you look at it, vis-a-vis most of the strategy that we pursue, at the beginning of the year, we set out to pursue retail strategy aggressively. And I can tell you this pay off, because using our online platform, Invest Now, has really, really added a lot of value to this positive outlook that you see.
Fantastic, great stuff. So you mentioned asset management, you mentioned retail, aggressive retail strategy. So this is what I'm going to now. In terms of business segments, you've mentioned a couple of the solutions you had, capital market solutions. Can you give us some color as to how your different subsidiaries contributed to the earnings that we've seen so far?
That's fine. Thank you so much. When you look at a subsidiary, I said we have asset management, so asset management, investment banking, trustees, securities. And my interest to you in terms of our growth, we've now gone into consumer lending, which was not part of our businesses as of last year. And all these businesses, I can tell you, they are performing from the numbers we show. They are performing way more than 2 digits above what was done last year. So when you look at even our trustee business, as we speak today, our trustee business engaged within the first quarter of the year, critical transaction in the market. They've been party to these transactions. This really help our commissions and fee, due to our focus on the key area, which is private trust that we are using to drive and using a retail strategy to drive that part of our business. So it's quite a positive outlook. Also, in terms of our security business, for me, I can say, despite the fact of the downturn that you see in the Nigeria stock market, our security business, I've never seen it this good. We ended this year, half year, at a very, very stable manner and a profitable note, because we have rejigged our strategy and our outlook for that business. And this is really paying off for us now. It's really paying off because technically we are operating far above the market.
All right. I want to ask you about liquidity. Your total assets, they increased by 46% on the back of a 242% increase in cash and cash equivalents. Also a 9% increase in trade and other receivables. Was there a conscious decision to increase cash and cash equivalents in order to enhance the company's liquidity standing?
Yes. You note I mentioned about the 5.3 billion CP.
Yes.
And the 10 billion bond that we issued. This was strategically deployed. We had, a clear focus at the point in time we're coming out. They were strategically deployed in a high quality yielding asset, and this, affect our growth of the total asset. In addition to that, I talked about how our asset management business were able to position themselves and say, retail-wise, this is the outlook we want to look at this year. And this, again, to a very large extent, really helped in driving the growth that you see there. However, considering the level of the uncertainty in the economy, we're looking at, how we're going to continue to manage the asset base as we grow it. It's about putting all our game in tune with what is happening in the economy and ensure that we're able to deliver value across board.
Okay, great stuff, great stuff. Earlier, you mentioned managed funds. I want to put some numbers to that. Your total liabilities, they increased in part due to a 95% increase in managed funds. I want to ask you about the mix. Is there an even mix of institutional and retail clients with respect to the increase in managed funds, or was it a case of, growth in one more than the other?
Technically, we have a mix, both institutional and retail. I think I can say 60-40. That's the mix now. But I think going forward, looking at our strategy, we hopefully to increase the retail bit of it. But as we speak now, I can say the mix of 60-40.
Okay. And as far as we've looked at half H1 now. As far as the rest of the year is concerned, what's your outlook? Are you optimistic? Are you cautious? How do you see things playing out for the financial environment where you're in?
For us as United Capital PLC, we are quite optimistic about the rest of the year. Having ended H1 at 18% above the previous year, amidst the pandemic challenges, we're quite clear of the direction. We have put in place a lot of structures, a lot of strategies that will enable us navigate through the thick and thin. And everyone talks about post-COVID. And we expect that the economic activity in the remaining of the year will improve more than what we had in the first 2 quarters. At least the lockdown is clearing out, and the activities within the economy is picking up gradually. We hope to tap from each of our businesses to tap into the opportunity that lie along. We think the low yield environment will still continue, and for us, it's a plus. As much as we have the low yield environment, that again helps us to really manage our fund very well and have a better yield for our various investors. So by and large, when you look at that, we believe that the year is quite positive for us going to the year. One thing we will not fail to do is to look at diversification. We want to see other areas that we can take advantage of, and we see opportunities, and we position ourselves to take advantage of such across any sector in the economy.
All right. I do appreciate your time. Mr. Peter Ashade, the Group CEO of United Capital PLC, thank you so much for taking us through your half-year 2020 result, unaudited half-year 2020 results. We do appreciate it. I hope to bring you back to talk about the rest of the year at the end, hopefully. Thank you so much, sir.